Hi, welcome to the Digital Fifth Fintech Show. Today we have with us Arun, who is the CEO of NeoGrowth. NeoGrowth is amongst the largest of the SME lending platforms in the country. And obviously, in the current situation, a lot of things are changing. So it's useful for us to get his perspective on what is happening in the market and how does he see future happening. So thank you, Arun, for joining us
Yeah,
and welcome on board.
yeah. Thanks, Samir, for having me on your show. Thank you.
Sin. So, first thing first, I wanted to know if you can give a quick share on what New Growth is all about. You have been in the business for long, and a lot of business happened, a lot of work has happened. So, it'll be useful for us to understand what all you do and what kind of products you have.
So we are a 7-year-old company, and our focus is essentially on consumer-facing retail SMEs. So
Mhm.
we lend money to grocers, pharmacies, restaurants, gas stations, uh, clinics. So
Mhm.
essentially, our business is built around digital payments,
Mhm.
which is primarily point of sale terminal, UPI,
Mhm.
and based on the data which we look at the application level for on the digital payments for our clients, we are able to assign a risk exposure to each of these clients.
Mhm.
So we have a balance sheet of around 1400 crores,
Mhm.
uh, around 20,000 customers, uh, spread across around 28 cities in the country. So fairly a large, well diversified business on in the retail SME lending space.
Okay, and in terms of products, I think you have all varieties. So, what? How can you specify a bit of your products,
So
please?
our products are essentially meant for short-term working capital needs of our customers. Some of the money get used for expansion. Maybe a restaurant wants to buy a freezer, or somebody wants to do a little bit of renovation in the shop. But largely, the money is meant for working capital. Our products, lending products, are short-term in nature. So we lend somewhere around 18 to 24 month kind of a tenure. And but one of the unique element of our business is that we collect money on a daily basis. So the
Uh,
moment sales happen at the outlet, a part of the money comes to Neo Growth as an installment for that loan.
okay, and almost all of your loans are of that kind.
95% of our loans of that nature. In some cases, the client will expect you to ask for a payment once in a week or once in a fortnight. But 95% of our customers are daily repayment.
Now, in fact, one of our client was actually looking at the payment cycle, which is varying with each dairy they have partnership. So I kind of understand the need.
No, it works very well for our customers. Say, for instance, you extended a loan amount to a customer where the monthly debt repayments are around 30,000 rupees.
Mhm.
But instead of 30,000 on one particular day of the month, if you charge the customer 1,000 rupees a day, it's a lot more easier for the client to pay.
I agree, and I agree.
And
You
yeah,
don't even have to get into that Nash setup and all, right? Because it is coming directly from the payment structure itself. So
no,
you have,
here also there is a uniqueness in our model. A large part of our repayments come through POS terminals. So we partner with the merchant acquiring organizations. They deploy the terminal at the merchant place.
Mhm.
Money comes to us first. We deduct our installment and give the money back, the rest of the money back to the merchant.
Oh,
So even in a scenario like a lockdown, we're still getting money from the terminals as collections.
not bad, not bad.
So the moment the transaction happen at the retail outlet, the amount comes to NeoGrowth.
Oh, okay. So, given that there's so much of chaos in the market, and then there's a moratorium, and there is obviously a bit of a bleak future. A lot of guys are saying in some segment for sure. What is the sort of permanent kind of behavior do you see in the customer side? I mean, what will happen now in going for future? Future, will they pay the money, or how's the trend you see right now? And maybe is there going to be a permanent change in the customer behavior?
See, I think there are two kind of customers we're talking here. One is our borrower, which is the SME, business, and second in the customer of the customer, right, the consumer. I think that there will be a shift in the consumer behavior. It's going to be a low touch kind of a business environment. So you will have discretionary expenses coming down, is what our assessment is. However, it's too early to predict how what kind of a shift is going to happen in the consumer behavior. But from our standpoint, the fact that we serve a very wide variety of client segments around 30 client segments we serve. Large part of that are kind of necessary products like grocers, pharmacies, clinics, and some part of that is discretionary. We see that there will be an impact or some mix change in our portfolio. It's very difficult to quantify right now that how is the shift going to be. But our business, as I said, is linked to the consumer behavior and the purchase at the merchant outlet. Fundamentally, that shift doesn't materially change the underlying risk of our clients. However, some clients will go through a low demand kind of a cycle, and those that portfolio we have to manage it proactively.
No, I think if you're lending business, those are troubles you have to go through every time something.
Yeah.
In fact, this time, not just lending, every segment has its own set of rules, right? So, very different. So, next question from my side would be, let's say, obviously the situation has changed. How have you reacted to it? How have you come to terms with the situation? That will be good for us to understand. What exactly are you working on?
See, our focus has largely been around number one, our employee safety. We have around 1,000 employees who work for the company across 25 plus cities. So employee safety was the first priority. Second element has been around business continuity. Whether you can serve your client needs in this kind of environment. So these two things were the most critical part of our action plan to how to handle this situation. On the corporate side, our focus has been on building our liquidity. Efforts were around, how do you increase your liquidity reserves to manage the uncertainty in the environment. And these three have been critical components of our business, at least from the internal focus point of view. From client point of view, I think one thing has been uh, on the top of our agenda has been the how do you engage with your customers, right, in this period. So even before the RBI announced the moratorium scheme, we were in touch with our clients, and there were multiple clients who were writing to us about their inability to, pay daily installments. As I mentioned to you, our product is around daily installment. So we've been working very proactively with our clients. Around a large part of our clients have opted in for a moratorium. We've been talking to them, engaging with them, educating them that if they have funds, they should actually, repay their installments, because it will avoid extra interest burden. Another thing which we've done is some of the clients who have borrowed money from us in the recent past, before the lockdown, they have approached us saying, "Can I repay my loan back without any prepayment expenses?" And we've been accepting those prepayments also, because if the business is shut, the client is just not able to deploy the borrowed funds. So I think it's been a very proactive engagement from the client point of view. One of the key things which we believe is that this entire situation is a business situation, is not a collection situation. Uh, all these clients who are not paying money at this point in time, they were paying money before March, right? So the idea is that how do you engage with them, understand what is happening in their business, can you support them in this kind of environment? And that is what our focus is. So we launched a scheme called NeoGrowth Sanjeevani, where we're going to connect with all our customers, talk to them, understand and how they've handled this situation. There will be large part of customers who would say that they have managed it well, they have enough liquidity, and their business was resilient. Some of the customers will need our support in terms of trying to work out on the revised repayment structures and moratorium, or maybe some of the customers may need additional funding. So all that has been put together into a scheme which I mentioned as NeoGrowth Sanjeevani. We're going to, the moment the lockdown gets lifted, we're going to connect with each of our clients and see how we can help them.
Okay. Okay. And do you see, with so much of flux, is there a new, possibility of maybe new innovation to come through? Anything which is obviously you don't have to share the details of it, but do you think there is an opportunity to do something completely new now because customers are different now?
See, customers will be the same, but the behavior will be different, of course. And I think understanding the client needs, their working capital cycles may be very different.
Right.
As I said, we primarily fund for the working capital. So we have to actually recalibrate our risk models. The existing risk models may not be fully valid. The existing scorecards or the algorithms we have may not be valid, because this is an event which is not factored into in any of the equations, right? So we have to actually recalibrate our approach. I think it will be a lot more digital than what it is today. But from risk management point of view, I think it will perhaps maybe a little bit more of judgment than data, because the data till February will not reflect the loss predictability. So it's going to be quite a bit of a change in the way we used to operate earlier. So the operating rhythm is going to change for sure.
Maybe a slightly awkward question. So, since you are large and well-funded startup, would you have any advice for smaller startups who are right now caught into awkward situation? What do they do? Can they partner with larger ones? What exactly can they do?
Yeah, essentially, rightly, Sameer, you said that they can partner with the larger, players, and also there has to be a lot more focus on cost, expenses, cash burn. I think that becomes very, very critical in this kind of situation.
No, I agree. I think we all know that when you grow, there's a tendency to lose money in something as random as maybe now. I think the office space, right? And then you realize that you don't need it as much as you thought you would. We were also trying to think of moving to a larger space. I don't think we have any more need left, even if things come back to normal.
Yeah. So
Uh,
one of the other elements of our business have been that our cost, around 40 to 45% of our costs were variable.
okay.
So if I don't have a business, my cost comes down accordingly. So that has really helped us in this kind of a situation.
Okay. So which means that we need now, given that so much of flux, we should only have a variable one.
I'm not sure, but the mix, which is more skewed towards variable, it brings in that kind of a flexibility for the companies to maneuver this
No,
situation.
I agree. I agree. I think other than the core employees, I think a lot of things can be flexible
Yeah.
and everybody can build it. So maybe the last question from my side is that given the so much of flux, what should employees do? They are on one side they are a bit worried on what will happen to them, and second time side is also they have to contribute more to the company because right now company needs expects more from them. So how do they sort of get ready for the future?
Yeah, I think it's about aligning with the shared vision of the organization. In a normal scenario, there are functions. There's a sales function, underwriting function, collection function, technology, operations. Currently, every organization is going through a situation where it's about managing the risk which you have in your portfolio. And I'm not talking about in a framework of collections alone. I'm talking about client engagement. How can you support uh, the entire ecosystem within the organization to achieve a common goal? That how do you manage your client relationship in this point of time to bring the portfolio value at risk to a lower level? I think that is very, very critical. So every employee in our company is currently focused on how do I manage this situation. So it's about aligning the goals of every individual with the shared goal of the organization.
Wow.
And at the same time, we are keeping an eye on when the things normalize, which they will. Uh, how do you go back to your normal operating rhythm?
No, I agree. I think normal cover is very awkward now because all of us built our own business models and the growth strategy. I think December, January, February, and then suddenly everything is now rebaseline. So
Yeah.
I think thanks Arun for sharing your insights and thanks for joining us. I think I'm sure my audience will love it when they get this. Thank you.
Okay. Thank you. Thank you so much for having me, Sabir. Thank you.
Thanks, Arun. Thanks.
Thank
Arun.
you.